Question: are you struggling with finding solutions that will help you reduce your taxes as a business owner and real estate investor? And are you just tired of receiving these unexpected large tax bills year after year? Well, I'm Mia Taylor. I'm a tax advisor and I'm the owner of the HEICO Tax Consulting Co. And I am thoroughly convinced that millions of Americans are just starving for tax advice. But shockingly, there are not many tax professionals in the market for taxpayers to turn to for answers. But I want to start with this conversation by saying this. Taxes is the number one cash drainer for small businesses. And we often don't like talking about it because we don't believe that there's a real solution to our tax dramas outside of overpaying. Or that if there is a solution, it's only allocated to the wealthiest of Americans in the nation. And that's just simply a myth. There are many, many, many solutions to various tax issues that can save you thousands. And that is why I'm starting these videos called the HEICO Tax Tips. So make sure you stay to the end of this video so you don't miss out on one of the tax strategies that I'm going to be sharing with you today. So without further ado, I'd like to get started with one of the most common business structures and questions that are centered around taxes. And that is, how do I reduce my taxes with my LLC? But before we go into the details, please hit that notification bell, like, share, and subscribe for more tax tip videos like these. So let's dive in. So first, let's get a few misconceptions about the LLC structure out of the way. Misconception number one. Hey, my LLC provides me with tax savings on my tax return. I just, Nope. The LLC is neither a tax strategy nor is it a tax-saving vehicle that reduces your tax liability on your tax return. Misconception number two. Hey, because I have my LLC, I shouldn't have to really pay that much in taxes, and I have to file my business tax return. Mia, do you have my business tax return done? Absolutely not. The LLC does not create a tax deduction. It doesn't absolve you from taxes. And if you're a single member LLC, right, you are not required to file a separate filing. You are still a Schedule C filer. Misconception number three. Because I have an LLC, I am allowed to pay myself as an employee to my own company. As a single member LLC owner, you're not allowed to take a deduction for paying yourself wages. And that's just how it is. So what is the LLC? An LLC is known as a limited liability company, which is a structure created by a statute in Wyoming in 1977 that allowed owners of an unincorporated business the freedoms from personal liability for the debts of its business. So in friendlier terms, an LLC establishes an effort to help small business owners protect their personal liability from potential business liability. So as you can see, there's nothing in the definition that states that the LLC guarantees tax savings, absolves us from tax problems, and whatever else that can go along those lines. However, with the legal structure of an LLC in place, there are many tax strategies that you can implement that can save you tremendous in taxes. And that's what I'm going to be sharing with you today. So let's talk about one of my favorites, self-rentals. Yes, self-rentals is very possible. The tax code provides us guidance on how this strategy can work for single member LLC owners or just LLC owners in general. LLC owners are subject to self-employment income tax. This tax is an additional tax of 15.3% that you must pay on profits earned in your business. This tax does not include federal or state income tax. Income tax is based on your tax bracket, okay? So in my years of practice, many LLC owners hate the self-employment tax because they see that there's nothing that can reduce that tax unless they create additional business deductions for the LLC. And self-renting creates a tax-deductible business expense known as rental expense. So what is self-renting? Self-renting is a business owner leasing back a property or asset that they already own. But Mia, why would I ever consider leasing back what I already own? Isn't that essentially taking one thing out of this hand and placing it into this hand? It's a wash. What's the benefit? Here's how it works. First, the business owner who operates a trade or business must also own the real property that will be leased back to the operational business. The property must be real property. Real property. Why? Because real property is treated differently than personal property. We'll have a whole nother video for that. Income generated from real property is treated as passive income, and that income is not subject to self-employment income tax. Second, you are allowed to take advantage of depreciation, which produces huge savings, phantom expense. So what is depreciation? Depreciation is expense that the IRS allows you to take on an asset such as real property over a period of time. So it's deducted over a period of time, year after year after year. One of the greatest advantages of depreciation is that it can offset your Schedule C income, your partnership income, your S corporation, and even your W-2 income. And if you so happen to be a silent partner in a business, it also offsets that income as well. Third, you must have a rental agreement between your operating business and your rental real estate property. Yes. And last, most importantly, real cash must transfer from your business account to your rental property business account. That is the tax strategy. Millions of Americans are looking for more ways to save in taxes and to do so legitimately. Self-renting is one of the many tax strategies that an LLC owner can implement into their tax plan. If you'd like to see more videos like these, please again, like, share, subscribe, share it with your friends. And that is your tax tip for today. Thanks.